What's going on, everyone? My name is Nicholas Merton here at Data and today is June 7th of 2019. Well, folks, I hope you all are having a great day wherever you are, and in today's video, we've got a wide range of topics to discuss, from taking a look at price action of both crypto and equity markets, to seeing yet again continued corruption in both cryptocurrencies and traditional markets. There's just more and more mania by the day, and we're going to be diving into it throughout the update. So we've got lots more coming up in just a few moments right after our quick sponsor. Our sponsor for this video is Travala. Travala is a hotel booking platform that provides a wide range of hotel bookings that can help you find your next destination. With savings of up to more than 40% than other platforms, you'll be able to find stellar discounts that meet your budget but don't detract from your experience while you're traveling. Best of all, Travala not only accepts payments in PayPal and credit and debit cards, but they also take leading cryptocurrencies such as Bitcoin, Ethereum, and XRP. And their intuitive user experience makes booking as simple as just a few clicks. With over 550,000 locations in more than 210 countries, Travala is here to provide the travel experience you deserve. Check out Travala in the description down below for more information. Alright, everyone, so let's go ahead and dive into some prices, and then we'll jump right into the news. As we can take a look across the board for cryptocurrency markets, things are mostly to the green side, with a few exceptions. This is due to the fact that Bitcoin is up around 1.2% over the last few hours, and most altcoins, because of that, are actually following in with more positive price action. Some in double-digit territory, like protocols such as Zilliqa, and even some privacy coins like Zcoin. So it's nice to see. Basically, what we saw over the last 24 hours that explains this is that we saw a double bottom of Bitcoin really within a very short time frame, back a matter of about 2 or 3 days, where Bitcoin basically bottomed out around 7,500 or 7,550. So we'll look at that as we go throughout the chart in just a bit. But going over the market view, again, no serious significant regain in value. I mean, we've gone up a little bit from the lows here, adding up about 6 billion more to valuation, but we're still a decent distance away from the relative highs that we've had in overall total market capitalization. And a lot of that is flowing into altcoins. We're seeing that come through in a lot of these altcoins over the last few hours. And again, I don't know if that trend's going to continue until we get a full-scale Bitcoin correction. We'll have to see. Maybe altcoins will be able to hold up even as Bitcoin goes down. And then after that, once we start to make a bottom around 6,000, who knows, maybe it could be upwards towards the $6,500 range, something like that. If we do get basically a nice 30% correction at a minimum, from there, we can start to see altcoins really making some progress, because again, we're going to be starting to build a base above what was being treated as potential resistance when we were trying to go on the uptrend, and was significant support for a very long period of time. And I think we're going to need to really show that we can have that kind of support. I don't know how long it'll take to form, but I think we need to see that before we can really have a full-scale rally to 12,000, to 20,000, and then way beyond into the new territory of the next rally. So very, very similar to what we saw going from the bottom around 250 to 300 back when Bitcoin was going through its previous consolidation period back in 2014, 2015, and then breaking out in 2016 and 2017 to those higher levels. Okay, so that's my philosophy. I'm just thinking very long term with it. And we'll go ahead and take a look at some price here to take a look at what I'm looking at in the short term. Now, I want to explain my rationale for the short term, and then I want to explain why I still stand by the fact that we're likely to see a correction. And it comes rooted in the sense of history. So in the case of Bitcoin here, we obviously have regained a tad bit. We've gone up about $400 off of the lows here, around 7,400 to 7,500. I mean, depending on what exchange you're looking at, you're going to get different results. But generally around 7,500 is where we're able to find support here. Yet again, double bottom, and we're testing back up towards hopefully trying to get past the big even of 8,000. We talked when we were originally live streaming. If you can go back and watch it and stuff you guys want. When we were live streaming, we were talking about how this was looking. This needed to break 8,000 for me to turn optimistic. And it seems yet again we're getting rejected here. Another thing as well, as I've emphasized in my previous videos, guys, I hate to beat a dead horse, but I'm just going to keep emphasizing the points that are still relevant. Until I get something, for example, that looks more confident on price, like breaking through 8,000, until I see some bullish, positive volume coming through that can outweigh the sell side volume that has been continuously outweighing any of the big hourly candles that we've seen, in that case. And not to mention something that's going to justify me wanting to buy it after a practical 3x from the lows, almost 3x, and a break on a parabolic uptrend line. I don't want to speculate just yet. I mean, you can try to trade these really small moves in here, guys, but I can tell you all, as you all probably know, I've heard people complain to the upside, oh, it's market manipulation, oh, the whales are, drawing people into FOMO, and then, oh, it crashes down, and oh, the whales are manipulating the market. Guys, the market's just illiquid. A very select few investors can push this up or down, and they've got most of their positions on margin accounts, okay? They can toss us around like... Okay, I just said in the last video, I'm not good with analogies. You know what I'm saying? They can basically, use this in any way they like in that case. And that's why it's best not to overtrade in this market. Hopefully that's a good description. Maybe I don't need to come up with an analogy for everything. But you get my point. So I'm taking in a lot of things into account. Now, what I do like, this is something that I've seen a lot of people on Twitter point out, as well as other people who I watch in regards to price on YouTube. Some people are saying that, even though this isn't a higher low, for example, than these over here, in the end, we're still kind of setting up higher levels here in the broader sense of things. And that's true. I guess that's a good point to take into account. But it's technically not officially higher lows. Where we really set our last low here, and you can see there was 2 significant points where we made previous resistance, which was weighing down price at 8,000 into support right here and here, right before we left on the rally and when we came for the retracement and moved back up. And now it seems like we're treating that as resistance again. At least that's what I'm seeing. Again, we might have different perspectives on it as a community, but I'd love to know what your guys' thoughts are on it down below in the comments. I want to see a nice solid close above 8,000, and I want to see volume following through on it. But I honestly don't see the buyers coming in. The last time we had a good set of buy volume was up here, right before we really set up our final highs around this range and stuff, a little bit above 9,000. So I haven't seen it just yet, and the sell side volume has been outweighing it on pretty much any exchange. At least that's serious fiat on ramps, and that's what I'm watching for, because that's going to tell us whether or not this rally can continue going up to the levels that it's going to. So, all right, now we've talked about that. To go through, I really don't want to spend too much time on altcoins, guys, because again, I am going to be doing my altcoin piece soon. There isn't many trades I want to touch until I see this going through the correction, and that's probably something I forgot to mention there, was why I do still believe that we're going through a correction here. The reason why I'm confident on that, everyone, is that we can take a look back at Bitcoin's history. As I've done in previous videos, I've done my video on how to simplify Bitcoin investing. It is tended that anytime we see a nice, steady rally on Bitcoin, anytime during a phase when you're in this kind of preparation phase, exiting out of consolidation for the bull market, or if you're in a full-scale bull market, you can consider that we're in a bull market now. It doesn't really matter. That's just kind of people's different viewpoints and definitions of what a bull market is. The fact of the matter is that we've had a near 3x. Anytime Bitcoin has these kind of multiple run-ups where the price multiplies, you tend to get anywhere from a 30 to 40% correction. There's a few outliers where it's like 25 to 28%. The vast majority are 30 to 40%. Okay. As of now, if we take a look from the highs here, from these lows down here, not even at the current market price up here, we've only had an 18% correction, and I should probably turn that to red. So we're going to need to see this come down somewhere between 30%, which would be around 6,400, all the way possibly to a range around 5,500. All right, and you can take the more conservative estimate. It's only going to go down, 30% in this case. Then that's fine. But we still got a ways to go in that case if we're going to be following history. Who knows? Maybe we're going to see a change in trend. I like to follow what the odds are giving me in this case as a probable outcome. All right. Okay. So that's enough for price. Again, that's just what I'm watching into the weekend. If we break below 7,600 again, I think that's when we start to enter no man's land. There's not too many major support ranges until 6,000. Maybe a rebound around 6,600, but I'm thinking that that's more likely. Who knows? We'll have to see. All right, so let's go through some of the news here. So Poloniex has angered margin lenders, not just margin traders, which probably most of the time are getting wrecked in this space because there's so much interesting collusion that goes on these exchanges with margin trading. But basically, margin lenders have lost over 1,800 Bitcoin in a margin trading loss. Now, I want to spend some time to explain what this is, how it happened, and basically this is something related to an altcoin that I've been watching on Poloniex, and I cannot believe, and this is why I'm going to be mostly critical of Poloniex in this. I have a Poloniex account. I use Poloniex. And Poloniex itself, being one of the longer-term exchanges, not to mention getting acquired by Circle, I would expect to be better than this. But, I mean, obviously everyone makes mistakes, but this obviously doesn't feel like a mistake to me, and I'll explain why. So, basically, there's an altcoin on the exchange called Clams, okay? So, if you can't already tell by this price action, it's been going on since February of 2019. Within a matter of just a few months, this happened on an altcoin that no one was talking about, had no, I mean, I've been to the website. I don't see any massive scale team working on. This has been an old altcoin that's been around since like 2014. Out of nowhere, started ramping up more and more on literally, if you look at the volume, like no volume whatsoever. And what happened is that there was people basically building margin positions on this altcoin, right? So people were taking lent capital from people who are earning interest. Basically, it's what a lot of basic exchanges do. They basically allow you, they say, hey, if you're just going to hodl your Bitcoin, you can lend it to our margin traders and earn interest. And don't worry, we're going to basically do a margin call if their position goes too low so they can cover it, right? So that was the whole kind of gist of it. The problem is that a lot of the individuals who were basically trading Clam in this case and had collateral to back it up, you know, and to basically back up their position, were using Clams or other types of altcoins. They weren't getting too specific on what you had to have to cover the position. And the price dropped extremely fast. It dropped from 1845 down to 6 in a very short period of time. And this basically led to a lot of people not being able to cover on their margin call. So what the exchange decided to do, to my understanding, is they stripped some of the Bitcoin from BTC lenders and basically used that to cover the gap in between the trade that they couldn't cover on the margin call. So the exchange decided to not just, basically target who should be most responsible in this case for this, which is probably themselves. They should have covered the loss in this case. No, they decided to actually dilute it from some of their exchange users. So let's read the quote. All BTC loans on Poloniex, again, this is all BTC lenders. They distributed against all BTC lenders on Poloniex, those that are lent in a common pool that are shared across all markets and borrowers. Today, we recognize the generalized loss across lenders and the BTC margin lending pool. As a result, the principal of all active BTC loans as of 14 UTC today have been reduced to 16.202%. Now, they claim that this is good because it only affected 0.4% of users, but this has led a lot of people to losing a good amount of their money in an activity where they thought, okay, I'm just going to earn my consecutive interest. That's what I was promised, right? Well, this is the problem here. And then now they're actually removing the assets. They're removing BitShares, margin trading, Clam, Factom, and MadeSafe. Okay, I don't really have a problem with these other ones because their price action's acting quite normal. Clam, on the other hand, I don't know how an exchange obviously couldn't have seen that this was pure market manipulation. Like, this is not organic, right? And notice as well, towards the end of this, how look at the volume, guys. Like, going from practically nothing and then just spiking up like that. All the volumes on Poloniex. There's no other exchanges. There's no wash trading exchanges that are doing this. This was on Poloniex, one that's been acquired by Circle, which is associated with some of the major financial institutions in the world. And they're letting this happen? They're not covering for their users when this happens? Seriously? I think that that's really, really inappropriate of the exchange, and how they let this go on when I was, again, spotting Clams back as far as a user of Poloniex, as far back as February and March when I was traveling to Thailand. That's just ridiculous. I'm sorry. That should not be the responsibility of lenders who, again, had no fault of their own and stuff. We're basically just putting their capital up and had to cover for people who were trading some crappy altcoin that probably shouldn't have had margin trading on the exchange. Okay? This is why, again, I say stay away from that kind of stuff, guys. And if you're going to get in the crypto lending space, again, I can't give you all direct advice, but I can tell you all, I wouldn't be putting my money in a margin trading system like this. I'd be putting it in something that's actually lending it out for real credit, or is doing the dollar, basically the dollar stable coin loans or something of that sort. A lot of the things like Celsius Network, stuff like that, that's much better, in my opinion. I really do not mess with exchanges and giving up my capital to exchanges for margin trading, but along with that, I'm not trading myself in margin. It's just too risky in this space. Now, one thing that I wanted to clarify that was going around the rings of news the other day was that Thailand's largest commercial bank was planning to use XRP. Actually, when I read this, I know a lot of people are one-sided on XRP. I personally, guys, you guys know I'm not a big fan of Ripple. Just the approach to Ripple, I respect it, and I'd like to see the banking system improve its money wiring systems. I'm completely cool with that. I personally believe that we're going to have, go back to a more of a decentralized approach to finance. People are going to manage their own money, or we're going to have much more decentralized ways of managing it and more decentralized ways of reaching consensus. That all being realized, we can debate at the end of the day what we like better. I was actually kind of excited to see this because I know Thailand, much like a lot of Southeast Asia, needs not only an improved banking system, but just something better than what they've got now, right? In this case, this news, however, has been debunked. There was basically a false tweet that came out through the bank's Twitter. This is basically, it's the Siam Commercial Bank. It's one of the largest commercial banks in Thailand. And they actually had to go out and say that they had to deny the claims, that they were sorry for the previous information, and that as of the moment, they were not planning to use XRP. I thought I'd just share that because this was big news the other day, especially for one of the target markets where cryptocurrencies are not only really designed for people who, again, they have the Thai baht, which is a little bit more unstable than the dollar, still pretty stable currency for Asia. And, along with that, I think it's interesting to see stuff like this because it would show us that we're going to start to get much more kind of crypto-based solutions in their financial markets. And I'd like to see what really needs to get fixed is the lending space. Going to Thailand, I've met a lot of people who talked about how, they can't get loans at a decent rate. It's like predatory rates as it is with a lot of the developing parts of the world. So again, just wanted to share this. And, hopefully we can see some increased awareness of cryptocurrencies in general and blockchain technology in the area, whether it's XRP or crypto or other cryptocurrencies. Alrighty, so one thing I wanted to talk about that was a little positive note. It's not too big on the news. I've been railing on Apple this week with their recent meeting and stuff that they had, the developer meeting that they recently had. And, as much as I give Apple crap, Apple, it's a maturing company, guys. You got to understand. When I see a company kind of, it's almost $1 trillion company, hit $1 trillion back a few months ago. It's basically at the late stage of the company cycle. So you can picture a bell curve, right? You have your growth phase, and then you basically start to plateau, and then you roll back over. We're in the plateau phase for Apple. It's not going to any more greater heights than where it's at now, but it can still produce some decent products and stuff. It's going to be a little pricey, but again, I know I've already rambled on, guys. I know we got some people who like Apple products. I have an Apple MacBook myself, okay, and an iPhone. So I'm not trying to ramble onto them. But one thing I actually have to say, I have to give them credit, is they not only recently added cryptographic support on a lot of the application development kit tools and stuff, where basically inside your applications you can have basically set systems of public and private keys, encryption methods, things of that sort. But along with that, they recently added the recent Bitcoin sign in this case, where it's not only an empty one, but also a full Bitcoin icon. So I'm glad to see this. I think this is really awesome to see. And, it's a small little addition. To me, this is, a nice little thing for people who want to build applications and actually start, using Bitcoin symbols and their, basically anytime you're dealing with a number of Bitcoin being sent or, selecting a payment method, things of that sort, something small, but at least shows that they're at least thinking about it. And I think Samsung was probably the one that pushed them to do something like this, because with all the efforts they've done in regards to having integrated crypto wallets with Engine and things of that sort, I think that this is going to push Apple, as well as pretty much any mobile company, to at least start considering cryptocurrencies as a major part and component, whether it be built into their wallets app or something of the sort. So that's good to see. Alrighty, so that's enough for crypto news, guys. Let's go ahead and dive into traditional markets. I want to talk about why futures are up practically for, I think, the third or fourth trading day now ever since we've heard about the Fed news of, hinting towards a rate cut. And possibly what we might hear about is continued quantitative easing. I really have no doubt that in this meeting in June or possibly in July, we're going to hear about that, which is shocking to think about, that we're going to hear about it that soon. So why did markets rally as strong as they did off of this Fed rate cut news? Well, first off, it's a big deal, right? The Federal Reserve cutting rates means that, the NASDAQ could easily, if we go down to 2%, or maybe we cut another time and go down to 1.5 or 1.75% for the cost of borrowing capital, that lowers the risk ratio enough to basically make the reward favorable for probably the NASDAQ to go up to 10,000. Right, it makes capital a lot cheaper to borrow, and if you're, not to mention we've been on a little bit of a dip here. If people find that there's enough favorable risk to reward, we could see the Nasdaq at 10,000. We could see the Dow Jones and S&P 500 going up to higher levels than where they are now or the recent highs that they set. So that's why it's a big deal. But the second thing that a lot of people didn't talk about is that as the market was clearly setting in a triple top on the Dow Jones and a double top on the S&P 500 and the Nasdaq, and was setting lower highs on the Russell, and as we were seeing the tech giants from the FANG stocks setting lower highs, people started to realize that this market was turning over, that unless the Fed did something, this was going to be a bloodbath. And the Fed seemed pretty confident until just a few days ago that they were going to keep monetary policy in a hawkish nature. They were going to keep interest rates the same or raise them higher. Well, that allowed a lot of hedge funds to build up massive short positions. In fact, we're going to go through this article and we're going to see just how much of a short squeeze is really going on. So it's a change in luck for speculators who have been raking in profits from well-chosen bets against individual stocks. As of last week, a basket of companies with the highest short interest, so short interest means you have a huge amount of individuals, short interest basically how many people in this case are placing short positions. But if we have a high amount of short interest, this means a lot of people are shorting or betting against the stock. This usually happens on a lot of speculative tech plays that are pretty overextended and probably not making that much money. The highest short interest was trading at the lowest level versus the S&P 500 in a year. Now that's unraveling amid evidence of a squeeze. So again, as the Fed came up with this news, some of the most hated stocks basically are now getting the love. And we've seen it across the board. So in the article, I think I highlighted a few more parts here. This is the other paragraph I wanted to read. Hedge funds enter the month with exposure setting near the lowest level in 2 years after boosting bearish bets in recent months, according to data compiled by Credit Squeeze. Now, the reason they were doing this is because, again, everything was reading off clear that you should be bearish in this market. And a lot of hedge funds, for example, that were overexposed in their long positions, what they do is they'll hedge with short positions. So they'll basically build up some of their short positions to match alongside the long positions, and we'll again try to level things out in that sense between their trades. And it turns out that in this case we got some news that is obviously going to set a reversal in trend in markets if they do follow through with it. And even just those hints from the St. Louis Fed chairman, as well as Jay Powell, who is the actual Fed chairman of the Federal Reserve. The St. Louis governor is one of the guys who is the St. Louis Fed governor, and then also Jay Powell is the Fed chairman. When those two voices came out and said they will do anything to expand and continue the expansion of the U.S. economy, aka the stock market, and along with that, we'll do anything in this case of the trade war to keep markets up. Don't bet against the Fed. They still got those two weapons. They've got lowering interest rates and they've got quantitative easing. They can keep the Ponzi going as long as they'd like. Okay, that's what it is at the end of the day. They're creating money out of thin air, right? So we take a look at the Nasdaq here. We can see we've had a nice bounce, 300-point rally on the Nasdaq here, recovering a good 4 days worth of sell-side price action. And futures right now are pointing to being up 0.3%. And we'll see what happens. I think what you're going to see is no serious significant rally until the Fed really comes out with an announcement. I think some people are still skeptical because there has been times in the past where the Fed has said, oh, we are keeping open to this, or we are considering, at a time of fear that we could use these monetary tools to keep up markets, and then they inevitably don't do it. But I think Jay Powell is going to follow through, and I think he's going to cut interest rates at least at a minimum, basically 0.25% or 25 basis points, and he's also going to possibly freeze the roll-off in the balance sheet. Those are really two. I think that would be a pretty, kind of light approach in the eyes of the Fed. But we will have to see. I think the Fed knows that if they don't do anything, this is just going to come back down and be a 30% correction in equities. It should happen. It would be really healthy. It might even be enough to consider itself as a pullback in equity markets and then allow ourselves to continue going up higher in a healthier fashion. But you need a correction like this because we have been in one of the largest economic expansions in history. But apparently the Fed wants to keep that going. They don't want to stop the train. So you guys know, if you watched the last video, I was trying to make some analogies towards the end. I'm not even going to try to do that. It's Friday. I hope you guys are having a wonderful day wherever you are. And if you guys like the video, please drop a like. Leave a comment on what you think about what we talked about today. And again, If you guys haven't already, maybe you're new to the channel, consider subscribing, consider hitting the bell icon so you don't miss another video. And if you guys want to support the channel, we got lots of stuff down below in the description, some awesome programs and stuff that you guys can use and sign up for. But if you have any questions, let me know down in the comments down below, and I'll try to get to it. I always try to read the comments. Outside of that, guys, I hope you have a fantastic weekend, and I'll see you all in the next video. Stay tuned.